So welcome back here, quick one. Today I'll be taking you guys on how you can do top-down analysis on your own. You don't need someone to be analyzing the chart for you. What if the person gone broke, as in broke down, or something happened to the person? Who will be analyzing for you? So I said, let me teach you how you can do your top-down analysis from the daily chart to the H1, from the H1 to 5 minutes chart. So don't forget to subscribe, turn on notification bell for more tutorial videos to come. Let's get straight to the chart. So welcome back again. Here is my daily chart. So first, we should know the trend of this market, which is the market is breaking structure to the upside. This is what I do first. I have to know the trend of my market. This is what I do on my daily trend of the market. Then from the trend, I have to move down to my H1. So on my H1, I would like to enable section breaks on my chart, which is this line you've seen here. So how do I get the section breaks? I'll click on my chart twice, on my candle twice, and this interface right here will open. Once it opens, I'll click on event. Once I click on event, the interface will open like this. Once it opens, I'm going to choose section breaks. Then I can change the line to whatever I want. Then I'll click on OK. So right now the section breaks is already on my chart. So how do this section breaks helps me? The section breaks right here will help me to tell me the previous day highs and lows. So I'll use this to mark the previous day highs and lows and zones between them. So another thing is, since my daily chart is telling me that the market is bullish, as in it's trending up, whenever I come to my H1, I should be looking for something that is trending up, not something that is breaking structure to the downside. And we've gotten one right here. You see, we've gotten one right here. There was a break of structure right there. And the candle that lead to that break of structure is this very candle right here. You scale this candle, you mark which is this last bearish candle you scale it to the future. And the reason why I choose this very one inside here instead of this other red candle, it's because this one has the longest wick. So I choose that. So I'll drag it to the nearest future. So I will go to my 5 minutes from there, and I'll wait for the market to come into this zone. So once that happens, I would like a shift in market structure. So a shift in market structure in this zone will look like this. I'll be expecting the market on my 5 minutes to do something like this. The market has to do something like this into this zone. And I would like to see something that break this high here to the upside, which tells me that the market has changed its trend to the upside. So whatever I'm doing, I'm to take a buy trade, not a sell. So anything that is breaking structure to the downside is not what I'm looking at. I'm only looking at anything that is breaking structure to the upside, because this is what I want. So I will click. So I'll wait for the market to come inside this zone, inside this right here, for me to take my trade. So what will be the type of stuff I'm looking at to take my trade? I'm going to be looking at a bearish candle. So once the market come and break structure to the downside, to the upside, sorry, once the market comes in and break structure to the upside on my M5, I'm going to be looking for a bearish candle. I'm going to be looking the last bearish candle which lead to that break of structure to the upside is what I'm going to be looking at. Then I'm going to place my trade at the at this candle right there. That will be my entry, and I'm going to TP the upside. I can TP 1 to 15. It depends on what I want. It depends on my approach in the market, depends on my RR. Everybody has their own RR. So I'm going to place my trade like this, and I'm going to TP the upside. My entry will be right here. My stop loss will come below that candle, and I'll TP the upside. So that is the first one that happened. As you can see, the market come inside. The market as well come inside this zone. The market as well come inside this zone. You can see the wick. You can see this wick right here. So you can see this wick that come inside. So if you go to your 5 minutes chart, you will definitely see your entry criteria here. Some you may use an engulfing pattern, meaning as the candle come inside this zone, you wait for it for another candle to engulf this very red candle. So you'll be looking for something like this. You look for something like this. At this point, this candle now will become a green candle. So once it closes, your entry will be around this zone, and your stop loss has to be below this candle, below this candle right here. So that will be your entry, and your stop loss will come below that zone and your target. But I prefer the other part because the RR is bigger. So another one, this happens today. This happens today. You can see here was the previous day high. Like I said, if the market is bullish, the only thing that concerns you in this market is the high. You don't have anything to do with the low. So there, here is the high. So you marked the high, and you can see it has broken structure to the upside. So what will you do next is for you to mark this very candle right here, and you scale it to the where the bearish candle is. So you mark the bearish candle, which I said the last down candle before the up move, which happens to be that red candle right there, which I circled, which happens to be this candle right here, this red candle here, this red candle there is the last down candle. So you are waiting for the market again to come inside this candle and give you a shift in market structure. So it has to give you something like this, like I explained before. It has to come and do something like this, because you are still buying until the daily structure has broken structure to the downside, is when you are going to change your approach in this market. So this is how I'm able to divert from my daily to the H1 to look for an entry in this market. So since my daily chart was bullish, this is what I do on my H1 to 5 minutes. I have to go with the bigger time frame trend so that I won't be caught unaware. The moment you come to the H1 and you start, you know, doing, you don't really know the bigger time frame trend, and you are on your H1, you will take a lot of losses that you're supposed not to be taking, losses that you're supposed to have avoided. You'll be taking it, meaning the little wins that you won, you use it to pay back losses. So this is the main reason you should make sure that you go back to your daily chart, learn how to do top down analysis from the bigger time frame to the smaller time frame. This will give you an edge in the market. Do this and thanks me later. And don't forget to subscribe, turn on notification bell for more tutorial videos like this to come.